Let's ask somebody who's been in this market, seen a couple of these cycles go through. Bharat Shah, CEO and Managing Partner at ASK Investment Managers, joins us right now. Bharat, greetings of the season, and of course, always a pleasure to have you. As you stand here at the market, walk us through, if you can, how do you see this market from a fundamental perspective and from a liquidity perspective? And in the next 2 to 3 months, who will win, liquidity or fundamentals, or both? And what could be the upside?
Well, I'm not very competent to talk about liquidity, so I don't have any really view on that. Secondly, to talk about markets from 2 to 3 months perspective about fundamentals, to my mind, is a misnomer. So I would not do that. But let me take a view a little longer than that. I think we are at a cusp of one of the biggest secular rises that these markets are going to witness. That's because the economy is going to expand at an inexorable pace. Like last 5 years, you've seen economy expanding at upwards of about 9%. I think the same process is going to continue for a great length of time. And that has to reflect into the markets and in turn into the investment returns. So I'm very clear about next 3 to 5 years, if not higher. But I'm not clear about next 3 to 5 months. I mean, it could be up, it could be down, it could be same. I do not know.
Mr. Shah, this is so much echoing the guests whom we had on our New Year shows. We had K.V. Kamath, we had Gopalakrishnan and Jerry Rao. And all three of them, the consensus view was that this economy is exploding, and very similar. I mean, 8 to 10% is a given in the next decade. Teens, almost 13 to 15% is something that they spoke about with reasonable confidence. Anyway, what would you bet on then? This is a huge statement that you are making. What kind of stocks would you bet on? Would it be infrastructure, which appears to be the one that's having the momentum now, or would you go on to, consumer durables or other sectors like that?
Lata, let me put this point. There is nothing given about economic growth rate. It is not imperative that Indian economy has to grow at 8 or 9%. There is no ordained kind of a situation here. But I think there are a number of indicators in place to suggest that this is something which is a great probability of occurring. You have a savings ratio of almost about 37% of GDP, and your incremental capital output ratio is about 4 to 4.25, which means if you use these internal savings into the investments and convert it into output, about 9% of the growth rate is something that you can reasonably foresee. To top it all, there is an amount of foreign capital by way of foreign direct investment. Then there is further capital by way of NRI repatriation. And then there is the portfolio money which is flowing into capital markets. So I think if you are saying that about 56-57% of GDP is consumption, in which is healthy, you've got about 37% of GDP as savings on an I-core of about 4.25. And then you top it all, you have got foreign flows in. And if these flows go into infrastructure and build the building block properly, it is conceivable that a growth rate of 8.5-9% or even higher is something which is possible. Right. Now, on a bottom-up basis, what I would say is that there are plenty of businesses which are going to grow based on these growth. Banking and finance comes to my mind the first, because it's a proxy on economic growth and it's a precursor to growth and is a force multiplier. So I would think if economy is going to grow at 8 to 10%, banking probably will grow more like 15 to 20%, if not higher, and will be a lead indicator, not a leg. Finance businesses, many of the specialty finance businesses will do very well. Infrastructure is something that primarily comes to mind because there is so much more to be done. So there are plenty of opportunities there, but you have to look out for signs of capital efficiency and corporate governance. Without that, many of these businesses may not be very attractive. Then you have to, I think the vast arena of consumption businesses are very, very attractive because, as I mentioned, 57% of GDP is consumption, and that's something which is going to grow.
Bharat?
You have to remember that till about we were per capita GDP of $250. We were more like a bullock cart economy. At $500, which was at the beginning of the current decade, at 2000, we entered into probably a bicycle economy. Today we are at about $1,030 odd per capita GDP, and I think we moved to more like a two-wheeler economy. I think this is the phase where probably we are moving into a four-wheeler kind of a situation, just to draw a parallel. And I think a lot of areas of consumption will do extremely well.
Right. Bharat, I just needed to ask you a question because you study the markets more from a long-term horizon. You know, some would argue, if you see the example of how the US and the European economies grew, as the economies grew, companies start making less and less money because the intermediation angle starts to go down. You know, you can't charge too much from customers, and we've seen that in telecom. We've gone from about 3.48 to 20 paisa, perhaps, or coming close to it, even though the numbers are growing. So, what are the sectors where a growth in economy doesn't necessarily reflect in growth of stocks? So, you really have to watch out for the fact that while the economy may be doing well, the stocks may not actually get the benefit of it.
Which is the point I was making earlier, that you'll have to look for capital efficiency, you'll have to look for corporate governance, and you'll have to look for the character of the businesses. There are businesses which are going to grow, but you need to look for businesses which are not only going to grow and get much bigger tomorrow than what they are today, but they are going to achieve their growth along with same or improved capital efficiency on one level, as well as an absolute level of capital efficiency which is going to be wealth creative. In any case, much higher than cost of capital it has got to be for it to create value. Thirdly, you need to look for businesses or managements which have respect for corporate governance and which are going to adhere to the norms where, the interest on two sides of the table is going to be treated fairly. So this is what you are going to look for. Surely, not every business which is going to grow will create value. So which is why I said in infrastructure businesses, there are plenty of businesses where margins may be pathetic, need for capital being constant, return on capital being poor. In many of the businesses, there are issues about corporate governance, and all of these you need to take into account before you are going to touch them. But I think when you take into account all of these, there are plenty of businesses which offer great opportunity. I was mentioning about banking and finance, energy-related businesses, pharmaceutical businesses, a vast area of consumption businesses, and even telecom that you referred to. I have no doubts in my mind that telecom is going to be far bigger tomorrow than what it is today. There are going to be some players which are going to make money hand over the fist, and they are going to do it despite whatever chaos or turbulence that you are seeing right now. This doesn't have to define forever, and I'm pretty sure that sound businesses in this area are going to do very well over a period of time.
Mr. Bharat Shah, thank you very much for sparing time for us. Always a pleasure having you.